Hello, dosto. Today I want to talk to you about important year-end tax strategy. It's a simple strategy, but oftentimes people implement it completely wrong. I see that when people come in for consultations and maybe they read about it or they saw some YouTube video or whatnot and they go out there and try to do it themselves. And usually that's wrong. And then obviously they get an audit and it becomes very expensive. So my goal today is going to be two things: help you avoid an audit, and B, give you a few options. Because, for example, you go to a doctor might have a medicine, but that medicine can be taken in so many different ways, and depending upon how you take it is going to have a different impact on your body. So strategies are the same way. You may hear a strategy, but the question really comes down to how do you implement it. So I'm going to share some examples of those with you today. So for example, let's take an example of Augusta Rule. Very commonly used by small business owners, sometimes, I wouldn't say sometimes, many times abused by small business owners as well. Augusta strategy is very simple. It says that, hey, if I'm a small business owner, I need to hold some meetings. I need to get my employees together. I need a place to discuss business. And I would probably go to a local restaurant to do that, or maybe I travel somewhere to do that. But instead of doing all that, why don't I just organize that meeting at my home? Makes perfect sense, right? Why not organize the meeting at home? And I can go and I can say, you know what? I spent $10,000 if I would not have done this meeting at my home, maybe I would have done it somewhere else. Maybe I would have paid $10,000 for that particular meeting. And because I held it at my home, I can just write off $10,000 as an expense from my business for holding that meeting. But more importantly, as an individual, I don't have to report that in my taxes. So it's a wonderful tax benefit. But there are a lot of caveats to it. Oftentimes it's implemented wrong. Oftentimes people don't check off those boxes. And I'm not going to get into that nitty-gritty of that. We can talk about it if you're thinking about implementing that in your business. But I just wanted to point out that is one flavor of that. The second flavor of it is we simply write off standard home office deduction, $1,500 a year. We write off, and that's the safest bet, and we don't have to worry about it. But then we can upgrade that, right? We can say, you know what? I have a 5,000 square foot home. I spend maybe $10,000, including my mortgage, property taxes, my electrical bill, my utilities, my telephone, all kind of stuff to maintain my home. And I use half of my home for business. So I want to write off $5,000 a month, $60,000 a year as a business expense. Is it legal, illegal? Depends how you implement it, what kind of business you have, is it structured properly? So there's no right or wrong answer in taxes. It's all depends. So once again, if you're thinking about going that route, we should talk in person. Now, we're going to talk about all of these things, by the way, in great detail at the Wealth Summit. So if you have not registered for that already, I'll strongly urge you to do that. It's on November 16th in Newark, California. It's a whole day event. And then if you register right now, you are going to get the 2026 planner for absolutely free at the Wealth Summit. And it looks beautiful. I saw the first copy. It's just gorgeous. It has, I think, about 220 pages in it. It has your monthly calendar, your weekly calendar. It has all kind of tools to help you become more productive and a little bit more focused with your finances. So I think you're really going to enjoy that particular planner as well. And like I said, we're going to talk about a lot of these strategies at the Wealth Summit. The another cool strategy that I think most small business owners can actually utilize this year is setting up a small shed in your backyard. Now, oftentimes people think about setting up a shed like maybe an ADU or something like that. And yeah, you can certainly do that as well. But think about it. If I wanted to just improve some value, property value, if I add a structure in my backyard and it looks nice, it's very well done, it's certainly going to increase the value of my property. But what if all that expense to improve the value of my property can be actually written off? Well, how? Well, maybe you're a content creator, maybe you're a consultant, maybe you're a service provider, a designer, a coach, maybe an online seller. You just got to come up with some side gig. You can be a tutor, you can have an e-commerce business. Think about all the things that you can do to show that you're a small business owner. And instead of just working out of your small room or a desk inside your home, why don't you work out of that little shed? And if you work out of that shed, that can turn out to be a great write-off for you, right? How? Well, what does the shed has? Well, shed has some structure, it has electrical work, it has some lighting work, it has insulation, probably have flooring, it probably have some desk in it, so it has a lot of things. So the only thing we cannot really write off is the land, but pretty much other than that, a lot of those things can be written off. And now with the bonus depreciation, a lot of that can be written off on in 2025. So great advantage for anybody who can show that they have a side hustle, they have a small business, to take advantage of that. And I think many of you guys are. Maybe you are a realtor, maybe you're a mortgage broker, maybe you sell insurance, maybe you are a consultant, coach. I mean, the list is endless. So you can spend $40,000, $50,000 and maybe you can write off $40,000, $50,000 on your taxes this year. Possible, right? So once again, before you do anything, before you go out there and spend $50,000, I would strongly urge you to talk to your tax professional before you go that far out. But I'm just giving you a flavor of what is possible. Now, some of you guys might be already have an established business. So you're probably thinking, well, I'm already in a lease. I don't want to spend any more money. I don't want to really buy a building or anything like that. So a couple of pointers. Number one point is that you can always sublease your property. So that's one option. And number two is oftentimes your landlord will let you get out of the lease as long as you can find them another tenant. So keep that in mind. Or you can give your landlord and notice that, hey, I'm going to be leaving the property in 3 months, 6 months, and they can work on finding their tenant. So keep that in mind. And then the second thing is, if you don't want to do something in the back of your home, you can always look into some of the commercial buildings. And these days, commercial buildings can be split into units. You can buy a little condo. Sometimes you can buy them as little as one room. That is also possible. So that could be another great way to get into that. Now, if you are buying another property, then keep in mind there are some rules around how you structure the ownership. The ownership structure mostly needs to match with your business structure. So depending upon how that business is, ownership is already structured, we want to match that. Now, as long as the structure matches, then we can use something called self-rental strategy. Oftentimes people call it -4 strategy as well, because that's how the IRS is coded. So what happens is, typically speaking, commercial buildings are depreciated over 39 years, but now with bonus depreciation, a lot of that depreciation can be captured in year one. So like I said, you cannot depreciate land, but most of the items such as structure and some of the other things can be depreciated instantly. Another thing I want to point out that is oftentimes missed out by people, especially the people who are new and they don't really work on properly setting up their business and build credit for their business. So they miss out on taking advantage of this opportunity, right? And the opportunity is known as 504. So if you're not familiar with it, the Small Business Administration has special loan programs for small business owners. So this program was created for this kind of scenario where a small business owner wants to purchase a property and use it for themselves. So these loans often offer lower down payment, they have a better interest rate, and honestly speaking, SBA loves the self-rental situation because you're a tenant for your own, from yourself. So that means you're going to be a great tenant. So all you have to do is show that your business is cash flow positive. As long as you're making money, then SBA loves you. So, and I'm bringing this up because think about it. In 2026, we're going to see lower interest rates. We are going to see an economy booming. We are going to see a lot of interest in real estate. A lot of small business will be looking to start businesses because of all the great tax policies we have going into 2026. It's going to create a lot of demand for properties as well. So maybe you buy a little bit bigger property, and part of it is you use it for yourself and part of it you rent it to other people. So this 504 is oftentimes missed as well. Again, one of the reasons why people are not able to take advantage of that 504 is because they're not structured properly to begin with. And their CPA or whoever helped them set up the business never even talk to them about it whatsoever. And like I said, as far as bank is concerned, they love you. You're the best tenant, right? Why? You're not going to cheat yourself. You're not going to default on yourself. You won't damage the property. So, that risk is not there. So if I was a bank, I'll love it. Now, once you own the property, you have the tax benefit and you're building equity. That is great, right? So I love the strategy. I think you should certainly look into it, whether you're looking into buying an office condo, building a shed, purchasing a small commercial unit. I think the strategy works. So reach out to me, let's talk, and I'll see what I can do to help you better brainstorm this strategy. And by the way, that's what your advisor should be doing with you. A lot of people go to advisors only to get an answer, okay, which is okay. You can certainly get an answer from them, but that is not really a good strategy. The better strategy is that your advisor work with you to brainstorm and figure out how can we improve upon this strategy? What else can be done? Where else are we leaving money on the table? Not just from a tax saving point of view, but from building equity, from better mortgage, from overall situation, how that can end up in your favor. That's what your advisor should be doing. So if you're not getting that kind of service, if your advisor is not talking to you about all of these things, then I will strongly urge you that you reach out to me. Let's have a quick conversation and let's see how I can help you improve your overall tax situation. Again, Wealth Summit is on November 16th, so please do register. And if there's anything I can help you, then reach out to me. Just go to taxcodeadvisors.com and set up a quick meeting. See you soon.